Hi, I'm Mike Sintolo, editor of Cabot Market Letter and Cabot Top 10 Report, and I'm here with your Cabot Weekly Review. Well, the market's putting finishing touches on a pretty good July, which is good news after a pretty bad May and June. But make no mistake, this remains a highly challenging environment. And a good example of that here, the first chart we're going to look at is the Philadelphia Semiconductor Index. Okay, now I'm not saying this is going up or down, but chip stocks are very important to the NASDAQ. They're involved in everything these days. It's hard for the NASDAQ to have a sustained uptrend without chip stocks. I'm not making any prediction, but just my point is just look at the volatility in this group, in this index, over the past couple of months. I mean, huge swings up and down, even over just the course, say the last 3 days. It's pulled back here, clean up the chart again. Just these sort of swings make it hard for the intermediate to longer term position trader to get a position on and then to not get stopped out. If you're a short term trader, you can make some money in here. But for someone like us trying to get some intermediate to longer term gains, it's a little more challenging. Now, as we look at the NASDAQ, it's not quite as pronounced. But even during July, we had a good run here right off the lows. But then you had a couple of bad days, then a couple of good days, then a big reversal, then a couple of good days. Now we've had a little bit of a sell-off the last few days. It's just this sort of choppy environment. It makes it tough. So that doesn't mean it's not trying to scare you here. I mean, it's okay to do some buying. It's okay to come off the sideline if you've been heavily in cash for a couple of months. But you got to have a game plan. You got to buy the right stocks at the right time. You got to keep your stops in place. If you're just kind of throwing money at the market, chances are you're going to come back a few days later and you're going to be losing money. You got to really try to buy the right stocks at the right time. Keep your stops in place and be willing to abandon ship, if things go awry. So how do you find the best stocks? Same thing as usual. You want to find good volume, good reactions to earnings, hopefully some tightness. Maybe try to buy in weakness some of these 2 or 3 day shakeouts that we're seeing in the market. Good example of something on the upside here is Riverbed. Okay, clean, nice, beautiful earnings gap. Volume was almost quadruple its average. I like this too. It hasn't really been a great performer during the bull market, which is good and bad. I mean, it's bad in that it hasn't been a great performer, but it's good in that, it's probably not over-owned or overly obvious. It just gapped out of this pretty decent looking base the last couple months. It's actually moved higher since, so I think this one can be a winner. You want to keep an eye on things that are still base building, but they have reacted well to earnings. Like here's Green Mountain Coffee. It came down, kind of shook everyone out. Pretty deep base, 35% correction. Good reaction here to earnings yesterday. It's still got resistance up in here. I wouldn't say it's a great buy this second, but maybe it does pull back like most of these stocks have been doing. Down a point or two or consolidate tightly, and that could offer an entry point. I want to talk about Chipotle Mexican Grill, CMG. If you're a chart watcher, you should have sold all or some of your shares here on this shakeout. It fell down. It had a weak rally to the 50-day, big volume break. Earnings were coming up. The market wasn't healthy yet, or it was in questionable health, I'll say. You should have sold some shares at that point. It just so happened a few days later, the company reported great earnings, and the stock gapped back above its 50-day on its heaviest volume in about 18 months, or 15 to 18 months. That's a classic shakeout, and you just know a lot of the weak hands are probably out of it. So to me, this is a relatively high probability situation. You could probably buy some here and keep a stop around 140. If you want to be safe, you could probably wait for it just to kind of emerge above 150 here to make sure this isn't just going to sag back to the bottom of the base. But this sort of shakeout, if you do get shaken out, it's an important lesson to keep an eye on the stock, because if it does turn around, it's probably actually, ironically, a higher probability entry point after the shakeout. A couple more names to look at. Adtran. This is a telecom play. Again, it's not overly obvious like Riverbed. It hasn't been a huge winner, but nice base here, good earnings gap, made some progress. And then this pullback so far has been on very, very light volume. It looks fine. I think it's a decent buy around here. Maybe you get it toward 31. And you just keep a stop here in the mid-29s or up at 30. You can also just look to buy on pullbacks. VMware remains a leader. This has just been in a nice uptrend, really. Of course, there's been these huge, shakeouts along the way, so that it's not easy to hang on to. But it definitely is a leader, institutional favorite. Again, try to buy on weakness, maybe toward the 25-day. Another one to keep an eye on here, last but not least, Cirrus Logic, CRUS. It's been sort of stair-stepping its way higher, very volatile pattern. Breaks out above 15, then got pulled back. Then it kind of broke out above 18 and a quarter or so on good volume. Now it's pulling back. It's had a big run. Don't get me wrong. This is very extended. It's 100% above its long-term 200-day moving average. So you're not in the first inning. But with that said, it could have, it certainly had a good relative strength during the correction. Nice breakout. It's held up pretty well. Maybe anything under 19 could be something. Just keep a stop in place in case things go awry. Well, that's all the time I have for today. Thanks for coming by. And join us again next week for another Cabot Weekly Review.